All right. Here we go. It's still trying to, let me mark that real quick because it's still trying to get there. I don't know if we're going to be able to test there. That's not, oh, it is an auction. It's just about, but I don't think we're going to be able to test that. If bulls are lucky, it might go and test here. If only they're lucky. But I'll just leave it there. Anyway. All right. So is today, yesterday, let's take a look at the yesterday's price action first. It was very, very strong. Is breakout after this squeeze. This is what we call a shorts being squeezed, meaning is all the short trades are being closed, is bulls are buying back, and we analyze this as, look, we have several legs down, and then we're finally above the 50%. This is signaling you the breakout is going to be to the upside. But we have to still come down and test the 50%, okay, of this was the trading range that I marked it, and I said we have to come down and test this trading range midpoint. So any breakout is going to trap every bull buying this breakout. That's how squeeze trades work, okay? Market goes up, comes down, goes up. The key signals are higher lows. You want to see a higher low. You don't want to see market coming down here doing this. This is never going to happen. It's never going to go up. You do not want this, okay? What you want is market like this in a trading range, down, going up, down, but you don't want this low lower than that one, okay? You don't want this high higher than that one. And then it's just like coming down, squeezing, okay? That creates a triangle. Squeeze started. It finally needs to take out these highs, okay? But you're not gonna, you can buy this, you're gonna take a profit right around high, but you're not gonna buy here. Never, ever, ever. This is a trap. And that right there was a trap. You wait for this to be tested. Comes down, then you buy it. That right there was an insane squeeze. Every bear exited yesterday, right there, and the bulls start to buy. You could buy one tick above 46, and then you're up and up and up. Look, is reach those targets. You could also say, well, this is a conservative way of finding your trading range. You can also just take the whole range, edge to edge, okay, high to low. You still have to look, take some profit there. It pulls back to the half R in between that, and then finally reaches that target before the end of the day. So 1, 2, 3, 4R, that tight trading range went sideways all day, okay, for more than 40 bars. Got a fake breakout. Look for a pullback, and this is where you're going to trap the sellers. This is where sellers jumped in because they don't know any better. These signs are telling you we're making higher lows. Do not sell. When it starts to get above the 50% of this trading range, that is the last sign telling you it's going to break out to the upside, but you're not going to buy the first breakout. You're going to wait for a pullback, and you're going to trap those bears right there, okay? And then you're going to go. So is when the bears sell and their stops are here. By the way, this is an unfinished business. Also another signal telling you it's a perfect setup. Okay, shaved tops is that means we are going to close way above this target price. So market is telling you, hey, I used to call them railroad tracks. When you see this, don't be fooled. Okay, buy it. Don't sell. It's not going to sell. Okay, it's going to trap you underneath the moving average. Except buy and then look for way above this high. Bull bars closing. If they close it, buy. Buy. Okay, they start to take some profit. They take profit here, comes back down, they buy again. Bars are closing above the 3R, so it wants to go to the 4R. So you're long. So how is this related to today's price action? That's because we have moved with spike pullback channel. Now I need to mark this area, okay? In fact, you can mark the entire area. This is a buy zone, support, whatever, right? I want to see buyers here. Extend this out. So what am I doing? Mark this one, tighten it up a little bit. So that means market is going to come down to this area. Today, it was very bullish. So what you're looking for is at the open is support and possible 50% probability of buying. Okay. Um, and if the buying is not all that strong, look for sideways for 90 minutes to maybe 1 hour, 1.5 hours is 90 minutes to 2 hours. At the end of the 2 hours, you're either going to see a reversal back up to these highs or down. Since we're at these highs, let's see what happened. So here is bar one. It's a doji. Will gap down. I don't like it, right? So it's not all that great. I don't know what kind of signal it is. I'm not very happy. I don't want to buy it. I don't want to sell it. But because it's a doji, there are probably sellers above, buyers below. So what about bar two? Okay, another bear bar, but it's still not great. In fact, it's not even taking out the bar one low. I don't know. I'm not very tickled with any of these bars, to be honest. So, but because the second bar is also a bear bar, there's something there that is signaling you, which is bar two open and close. Bar two actually opened slightly below, gap down. Believe it or not, it actually gapped down right from the bar one close. So it's kind of bearish. They're already selling. And they closed it somewhere in the middle. Not all that great, but that signals a sell. I would sell the close of that bar. And I would look for quick grab. And that is my 1 hour right there. So I would take that. Why? We're going into these support. I'm looking for a double bottom. I want to see a bull bar touching this area. I want to buy it. Not four. First of all, this is not, bar three is not a good buy signal bar. Bar three is continuation selling, okay, and target profit taking, 1 hour, okay. Now bears want the 2R, and they can easily get the 2R. Problem here is that because bar 1 and 2 are dojis, remember dojis are trading range bars, right? So that means they're buyers below them. So I'm thinking look, 2, 1, 2 buyers showed up, goes up, right? But there are also sellers here. Now we have 3 bars down, 1 bar up. We have confusion. So we have probably sellers up here somewhere. Okay. If bar 5 is not buy to close 4, then this is a trading range and the sellers started to come in. So what do the market wants to do? Well, these bears were going for 2R, but they couldn't close a bear body below the 1R. So now they sell at the top of a trading range, right? And then they close, look, they close another bar below where they sold. So that means you should sell, expect 1R to be tested again, and then continue to sell into 2R. Now here's another thing. I was looking at here is one of my ways to find trades is that I look at the situation. This is a tight trading range. It's trying to break out to the downside. Now I see a really strong bull bar, and the bulls try to buy above it and got trapped. Now the bears are exploiting this and coming down. They close the body way below bar 4. So what I do is I put my stop above bar 5. I measure first from the open of bar 4, but you don't have to because the wick is so tiny, you can actually take that as well. So this is I'm going for a 1R, 2R. That was my scalp. I generally front run my targets like 1 or 2 ticks above these levels. So basically, it sold. This was my signal telling me I should sell, and a measure for 1 hour and 2 hour. And then if it goes up, sell again here and expect that. So there you go. So I got that. Now I'm not happy. It goes back up again. What is going on here? I don't care. Whatever is going on here, I'm selling it because I have a 2 hour target. So here it is bulls try to buy again. Another one. They're trapped just like 4 and 5, 11 and 12. But I need a bar taking out the 11. Pay attention, please. This is important because you can apply this to any market and you can do great. Look, 12 did not take out the 11 open. So I don't know. I can't really sell this. If I'm still selling, I'm holding a runner. I can actually enter here. So you can use these levels. I would is at the threshold, I would put a sell order there because this one's already spent. Whatever the sell orders were there, gotta sell. This area is weak. No one's gonna sell here again. If they're gonna sell, they're gonna sell here, here, and here. So it could actually extend up before selling. But the good news is that anybody who bought above 11 is now trapped. Okay, once again. So now but the problem here is that I could sell here, okay, expect for it to come down. The only problem here is that 12 did not really take out the bar is 11 open or the low. So these bulls want probably another leg up. So there might be more sellers up here. All right, so anybody bought here, bought again, and now look, if you extend this, now this time that's the 33% pullback. It's just snagging. Sorry, let me move so you can see it. Okay, this is 33% pullback inside. You don't need all of this. You could just put a sell order here and sell there. Okay, so now 12 did not take that out, and this is a leg 1, pullback leg 2, pullback leg 3. Okay, now we have sellers showing up. The trading range 50%. Great. I might, if I'm still holding, great place to sell. Expect price to get back down to here. Okay. So here we go. So 2 bear bars. That's great. But in the meantime, I'm also swing trading this. I have 2 bars. This is always in short. I'm thinking I should be able to get a 20.5 points, right? That's L's always in short. First target. We already got that. That's easy to take because these days ATR is so strong. Okay. I mean, look at that. At that time, when it was selling, when it actually gave you always in short setup, 2 bear bars, you measure from the 6 low, right? Look, ATR was at that time already 33 points. And if L's saying you're always in short, okay, is a 20 point and 2 ticks, right? So, and the ATR saying, hey, we're actually going to move it a lot more than that. That's just a scalp. You should not be going for this, but you can go for this. But if you go for double that amount, which is 40, you should be going for 41. It's actually 40, but add another point. That's how L calculates it. Is you take a scalp at the 20 point, then this goes up. There's nothing always in long here. Why? You don't have 2 consecutive bull bars. Okay. So this is right here is probably pulling back. So to me, this day was a breakout, but it's a very weak breakout. And then pull back and a double top at the moving average. Low 2, sell, bear flag setup. So now I have 2 bear bars and a really good sell signal bar. I sell 1 tick below. I sell with a limit order there. I sell with a stop order underneath bar 15. But I still need more from bears. What is that? What do I need? I need to see bear bodies closing right there. Okay, taking out the open of a strong bull bar. Then I can, instead of measuring this, I can measure with a stop above 15, entry there, or that's just measuring. You're already selling here. But if you're waiting, say you didn't sell anything, Here, this one also didn't close. This one did. So what are you going to do? You could do the same thing, right? So you can, here, I'm going to leave this in here so you can see the difference, right? So they sold, that was their 1 hour. Now I also have an always in short target, which is right there, which we got it. But this time I'm also going to measure from here. Is now my stop is there. Now that's my 1 hour. Did I get it? Yep. Even the pullback, they sold it. Look, if I extend this, like even the pullback, I should put a sell order right there. Now this one breached it. Doesn't matter. ATR is so big, it's just going to breach. But in normal times, you just get a tag and an immediate come down. If you didn't sell there, you could sell one tick underneath. So is not only we're getting the 41 point, it has to go 41 point to give you a 40 point. So it did. And then it also gave me this target. Okay, so bar 23 is giving you the target. Now, how do you know is price can come down here? It needs to close a bear body right there. Okay, this is also 2R from this setup. You also want this 2R to be tested. We have a bear close. Now expect that and that tested. Excellent. So we got that, we got that. If you're, this is 1R, 2R, 3R. This is from this setup, okay, 1R, 2R. Or you can even measure from here as late as this right here. Then you would go for 1R, 2R, 3R. Congratulations, this is still coming down. Beautiful bars. So I ran out of R's. So, here, let me measure that just to give it a. Okay, so that's a 1R, 2R, 3R, 4R, 5R. You got a 6R before reversing back up. This is fantastic, but it's a tight bear channel. Okay, it's a tight bear channel. So basically, I'm counting legs. Even that is a tight bear channel, right? So it's trying to do this. Okay, so I'm looking for leg 1, leg 2 is, and leg 3. So maybe leg 1, pull back, leg 2, pull back, leg 3. I don't know about this one. So I'm going to count again. Maybe leg 1, pull back, leg 2, pull back. No, this whole thing is a leg 3 because this high did not go above it. So I did count correctly. Leg 1, leg 2, this one went up above it. This whole thing is a leg 2, leg 3. Leg 3 generally can be divided into 3 legs or 2 legs. Okay, so it's complex. So that's what it's doing, which is fine. So what does this mean really? Is it means we're going to break out to the upside. We're going to reverse, but it's going to be minor. When the bear channel is tight, right, the pullback needs to sell again. Probably there are sellers stuck here. So we need to try to come down. But the one thing I need to do before I sell, okay, I need to find a gap body. So because in that gap body, if the bears market is not all that bearish, it can try to come down to the lows. But if they cannot close this bull gap body, we're going to reverse back up. So that means some kind of a bull flag will form. So this is good. Is we came down, now we're bouncing. Whoa, that bar is huge. But the 36, bar 36 is not a good buy signal bar. Just like here, we have 3 push down. We have a double top. That's the first swing. Then we have another swing right there. We had a wedge top. We have another wedge top. That's a low too. Swing down, which is great. So now we're kind of at the end of bar the third hour. I can say it. Okay, so bar 36 is the end of the third hour on RTA chart. So what does this mean? It means is we're going to probably reverse, whether we're going to reverse with the 36 or maybe bar 40, but we're going to reverse. Reversal came in at the end of the third hour, but it probably is a minor pullback. It's going to want to come back to the low of the tight channel. But the problem with bears is now bulls are weakening. So I'm definitely expecting price to test the 36. That's a magnet. because it's not a good buy signal bar. Bears were stuck there, right? As they were selling, they got stuck. They're not going to immediately sell a bull bar like 37 because it is pretty strong. It's showing you a gap body. So it's telling you a bar like this probably is going to drift further up with a couple of legs, expect 2 legs, to a key price like moving average. So we did get back to the moving average, okay? And in the meantime, we had a spike, pullback, and a channel up. So we're definitely going to come down and test these, okay? But I'm more interested in bar 36. Now, how do I know market can actually resume the trend and continue to sell and make new lows? What would establish that? That would that needs to happen with bears closing the gaps. Now, some will say this gap was closed. I disagree. I don't think that these are closed gaps. Okay, yes, the wicks come in, but wicks are bad price action. Wicks don't close the gaps. In my opinion, they don't. And the way that I um, determine that the bulls are going to come back in again, when, pay attention, write it down, this is important, when a bear body or bull body, doesn't matter, better if it's a bear, cannot come down and overlap with the body of a bad signal bar. Do you see that? It needed to do this. So when it cannot do that, this gap is still open. Market is telling me, girl, get ready. We're about to reverse this up. We're going to go right back up. Okay, there's an auction here. It's the top of this flag. We're going to go back up. That right there, I told everybody in the afternoon, yes, we're coming down to test it. That's given. We're going to do that. But if it's a weak test, meaning it's only with the wicks, and the gap is slightly still open, this gap from there to there diminished to this much, but it is still open. So now you have a first buy and a second buy. Believe it or not, this is actually a variation of high 1, high 2. So, or you could say high 1, high 2. Okay, buy above this bar. Don't even look back, because all the bears are trapped underneath 46. They were selling and they were looking for a market to become a lot more bearish. Instead, bears actually sold. Look, this was their 1R, right? This was their 1R. Or you could say, hey, this is a confirmation reversal bar, pullback. This was the 1R. That's great. I actually measured it 2 ways to show people this is where the bulls are going. But when you get there, you have to take profit. I said that. You can listen to the review. I'm sorry, the replay. And you're going to hear me taking profit there. But I said this could actually pull all the way back to the 50%. That's because bears are trapped. So what those bears will do, if they're trapped with that close, they're going to sell where the bulls are taking profit, right there. Okay? This is their break even. Get rid of this. This is their break even. But that's average break even. How do you know it can come down more? All the way to the break even, actual break even. Okay? That means they're going to have to close a bear body. Instead of coming all the way down here, they actually tested the threshold but could not close a bear body. That means this market is not all that bearish. And the bulls are preventing this institutional level from getting broken. So if the bulls can prevent it, that means bulls are coming in. But let me show you something. I actually measured it wrong, and no one caught me. Now, this is okay if you are measuring from here. There's no right or wrong. But actually, you see this right here is 32, 33. This is the breakout bar. Everybody sold underneath 34 or 32. So you were supposed to actually say, no, everybody sold underneath 34 should be selling at the 1R profit taking. Then this is their average break even, and they closed a strong bear bar, so keep selling because they're coming down to get their actual break even. Okay, this is continuation selling. They didn't really get trapped there. They actually got trapped underneath 34. Their sell didn't make all that great money, but look what happened. This is an actual break even. So these bears actually got their break even. Look, guys, if you are new to trading, if you cannot figure out is why market suddenly reversing here rather than closing bear bars and continue to sell, if you cannot tell who's stuck and who's getting out and where they're getting out, okay, then you're not the half the trader you think that you are. You're not. You got to face the truth, and you have to say, I need to go back to is the beginning, okay, the start. I have to study everything. Go back to L Brooks trading course and study everything. Understand how L explains where buyers and sellers, limit order buyers and sellers, why they would re-enter the market, where's the best place to buy and sell to break even. All of this are actually explained in the course with examples. Okay? Or join the Brooks Price Action Trade Room and let us explain and teach you how it's done. You do this and take 50 trades to 100 trades in sim environment, and you learn how to break even, or at least watch and understand how these trap bears get their break even and not able to close a bear body where they sold. Do you see 45, 46, 47 closing? No. So that means they're quickly taking profit. Okay, look, it's coming down and they watch this, they see it. Failure, failure, failure. Nothing's closing a bear bar to continue further down to these lows or maybe even get new lows. They're going to have to exit. They see this bar, they exit. Now the bulls take over. Why do you think that we got the bar 48 that's so big, but it's not small? It's so big. What makes this bar so big? Everybody trapped here sold at the reward as the bulls are taking profit, got their break even, start to exit out of the market, okay, very fast. That fuels, okay, the bull bars, and suddenly you start to get bull bars that are big enough. That's a signal we're going to go to that high, maybe even higher. Okay, so that's what happened. And the market continued to go up, went up and up and up. Is it got a 1.5 R, but I don't measure it from here. Should measure from there. This was the way I measured. Okay, so there, or you could say, oh, look, there's another. These are bear bars, and there's a bull bar. So you can start to measure. Stop here. You can measure from there. That's your 1R. That's your 2R. And then suddenly this happens. Are you going to sell it? Yes, you can sell this. This is profit taken. There's 3 legs here. Leg 1, pull back, leg 2, pull back, leg 3. So we're probably going to come down and test the 3rd leg starting point. We might even come down here. I don't know. How would you know? Where's the target? Did the bears take out? Oh, yeah. So you put your stop there, okay? And I measured from here. I measured from here because this is too tight. And normally, if the wick is not, this wick is, to me, is too big. Normally, you should be measuring from here. Then you would expect this target. Problem here is that this tight channel, and it's got way too many bull bars. Bulls will try to fade underneath strong bear bars. Okay, it could be right underneath 56. It could be at the key price level, which is moving average. It could be at the bottom of where the 3rd leg started. Okay, or is do what I do. Be very conservative. Put your stop there. Measure from the close of that bar. This is a confirmation bar, taking out the bull bars open and low. But it's happening too fast. But it's a very good close. If you sell it, this is your target. Market still is very forgiving. It gives you enough money or points. I don't know how many points that was, but I did actually scalp that. Hello. That was 18 points and a quarter just to cover your, that's, to me, that's success. That's a lot of points. Okay, even though it's only 1 bar. But you go for it, and then you take profit and you're done. If they were to close bar 57 below 1R, we would have continued into another half R and then the 2R. So that would have been a 1.5 and 2. Well, 57 didn't close, so profit taken. Okay, they tried again with 58. Didn't close, so there's no follow through. You're not going to get anything more. Now they close a bull bar. Now, I don't know if I can buy this bar. It's not fitting in my way of measuring things because it didn't really close above the high, but it did something. It's an outside up bar. Its low is lower than the prior bar's low, and its high is higher than the prior bar's high. And in the meantime, it's a really good close. Body close above the open. Okay, I mean, this isn't the ideal setup. I wish that body actually closed above the high of 57. Then I would have put the stop here and go for 1R, 2R, 3R. But I'm going to measure it anyway because I'm going to buy the close of that bar and expect bulls to actually get back up to here because they're stuck there. So what am I going to do? I'm going to measure it conservatively. Okay, you can measure it two ways. Stop goes here. You can take the open of this bar that they actually violated and go for 1R, 2R, 3R. This is my favorite way of doing. Why? Because it's conservative. I go with what I can. I take with, I apply logic. Okay. I don't need to be 100% accurate, but I like to be safe because there's this big bear bar with a gap. But now I'm going to measure it as conservative as possible. I'm going for a 1R, going for a 2R. Okay, we're now closing. That's it. I'm going to hold it for 3R. And the gap is closed. Now, if you were to actually measure this, you never got your 3R. You see how dangerous it is to measure that one that way? So I call this an exploitation. Exploitation of what bears were selling. And bulls are showing you signs that they can able to take out those strong opens, yet they can take it out. So I'm going to measure this my risk, and then that's my reward. Reward 2 and reward 3. I'm taking profit. I'm done. I don't care if it goes back up there. I'm done. So now I'm hunting another trade. Some will say, well, what if I just take this? Sure, go for it. But did you get your 2R? How accurate is that? It's not. That's not the way you measure it. I've been trading like this for years, so it works. I'm giving you guys everything in my book so you can learn and be a good trader. Or join the Brooks trading course, Brooks Price Action Trade Room, and just come in and learn from us. Just give it a month or 2 or 3 months. You're gonna pick up a lot of great methods to trade with. All right, let me explain more. All right, so now there's another one. Oh, look, bull bar, bear bar. Oh, I like that. I mean, even here, but this one didn't work. This one, 61 didn't really close. I can't really know, but this one I like, okay? This one closed. So I'm going to be conservative. I'm going to measure from, okay, I'm going to measure from the open of bar 63. I'm going to go for 1R. Oh, they closed it. I like this. I want to go to the 2R. And in fact, I was actually going for a 2R, and then this happened. I was like, what the heck happened? Maybe I should have measured from here. Even then, see, I don't like to do that because the lower wick is so large. I'm never going to get it. So now what? Sometimes you're going to get trapped. That's the name of the game. And what happens when you get trapped? Well, you're not going to, go hide somewhere and cry your eyes out. You're going to get into fix it mode. Fix it. Fix it. We're going to fix it because we're stuck here. We have a nice confirmation. Okay. We close below the 1R, right? So what are you going to do? Where are you going to sell? Tight trading range. Okay. Your stop is up here. Probably these bears will probably going to defend their stops above. Maybe they have a white stop, but they're going to defend it. Where are they going to defend it? First sellers are here, breakout point. Then more here, maybe even the upper third, which I call a threshold. As long as bulls won't close above threshold line, I call it a threshold. It's an institutional level. Institutions watch these levels. If they see a bull bar closing, they immediately exit before their stop hit, or they sell higher. They get prepared to sell higher to bring it back down. You, as a retail trader, look at this and see, okay, I can sell in these levels or the upper third and then expect price to come back down, okay, first to this low, back to where I took profit, possibly where I got trapped, Classic trap. Look, market is coming down and looking like it's going to give you the 2R and traps you. So you're not going to cry. You're going to sell again, but in the right places. And the market is going to come down where you got trapped and now you're making money. Okay, they trap you again. Like, what the heck? Why does this keep happening? You are still making money. Look, they sold again. Where did it go? 2R. Where did it go? 3R. Where did it go? 4R. So this was still a good, decent trade. It took a while to actually swing, to get down to these levels. Okay. There was also a flag here. Look, beautiful impulsive leg. Oh, there was another flag here. Another flag here. This is a trading range, though. I wouldn't count this as a flag, but it is a flag. This is actually a flag, but it's really difficult one. Okay. But this one's a flag. One big impulsive bar, bunch of bars, but you can see bears are trapping the bulls above very strong bull bars. That's how you know this is a bear flag. So you can put a sell order right underneath that bear bar closing below its midpoint, and then put another sell order maybe around the 68. Let market pull you in. And where's your target? Stop goes there. Say you sold right here, that's your 1R. Say you sold right there, that's your 1R. Now, I would like to see more follow through, but then this flag happened. This is a much better flag. This one, I put the stop there, okay, above, right there. And then I put an order underneath 72. That's my target. If you sell the close of 74 or lower, you're not going to get it. Sell earlier. Limit order bears are selling earlier, okay, and they get their target. It was difficult, but it still worked. So anyway, let's take a look at the overall market. So we got a really nice, we had a double top at the open, small trading range, started to break out to the downside. You have a double top swing, but it's a terrible breakout. You have terrible breakout bars, okay, not working out all that great. So that means breakouts are lousy. You're getting a another small wedge, so it's going to reverse back up. So that means it's a bad breakout for bears. Pull back. Now you have 1, 2, 3, 1, 2, 3. That to me is a wedge top in a kind of a bear flag. I'm looking for consecutive bear bars with strong closes so I can sell. And if the bears are taking out the strong bull bodies, that's a fair game. I should be swinging this. I start to sell. I see bar 18 actually taking out these lows. That's great. Actually, this one actually failed to take out. That's why it went up. But still, breakout points. They're selling, right? These bulls were stuck up here. Why did this go up? Because they had to buy lower to break even before it came down. So you can sell the second sell, right? So this is first sell, second sell. So that's low 1, low 2, low 3. And then rest, you don't even have to count. You're just moving your stop with it. So we had a nice swing. Lasted about 3 hours. Bar 36 is the third hour. Then we start to reverse quickly. But because it's a bear trend, most likely it's a minor pullback. We're going to have to come back down. If the bears were to close the gap, bull gap, we would have made a new low. Maybe even another low. So we would have made this would be a spike pullback, channel down with maybe 2 more legs down. They couldn't close the gap. So that means bulls are coming. I'm getting another swing opportunity. This is now a bull flag. Okay. In fact, here's a 1, 2, and 3. Okay. So there you have it. High 2, high 1, high 2. I'm entering. I'm buying. Some scalping is going to take place at the high of this bar or there. But once we start to get the breakout, I'm going to be looking for follow through. But now I have another spike pullback and 2 legs more. So I have 1, 2, 3, double top, lower highs. Where is the pullback of this? Up, spike, pullback, goes up like that. It's coming down. It's going to want to come down to here and there. So that means if this is the pattern, that means this is my pullback from there to there, but this is too big. I don't like these large ranges, but it is what it is. This is the range, okay? some spike, pull back, and then goes up and goes up. So I want to see market coming down. Leg 1, pull back. Maybe leg 2, pull back. Leg 3, no. This did not go below it, so to me this is leg 1, pull back. Leg 2, okay, this could separate. That's good, so I'll take that as a leg 3. Okay, or leg 1, leg 2, it doesn't matter. It's just you're counting. So we come down and test the bar 57 low. That's what I wanted. We ended up coming down a little bit more. So in a situation like this, when I have a wide range, okay, I have no idea where the buyers are. Okay, so where will it pull back? So what I do is I divide it into 3 L's, 3 stacked, okay, trading ranges within a one big range. I want to see areas where I can see buyers might be waiting. That's it. That's a 33% pullback inside. If it's not going to go to the 50% or 33, this is it. This is where I'm going to see if the buyers are going to start showing up. Yep, they did. Now I have a buy signal bar, micro doubled bottom. This is an inside bar. Bar 76 is an inside bar after 3 legs down. What does that mean? That means if the body closes at and above its midpoint, doesn't matter even if it has an upper wick, as long as it's an inside bar with a decent body. In fact, if you're not so sure, measure the bar, see where they close the body, right at the midpoint. So this to me is a great bar that I can stick my buy stop order 1 tick above. So I have a 1 tick above right there, buy order. You should be exiting from your short. In fact, they found support right there. Okay, so now it's going up. Where is it going? Where is it going? It's going back to the tight trading range midpoint. Everything is a trading range. Okay, if you find your trading ranges after they break out, trading ranges are tight balance zones. This is where the institutions balance their buy and sell orders. So therefore, the heart of these tight trading ranges, it's like a house to the market, is a good place to go back inside and balance. That's where the fair price is. So this is not fair price. This is imbalance. This is balance. So find a 50% of this trading range. Now, I like to exclude the wicks. Okay, so that would be my midpoint right there. So it's going to go there, right? And it's probably going to stop there, and the bears will try to sell. And that's what we got. And bears did try to sell. Let me see. Oh yeah, check that out. I mean, hello. Look, they did sell. And it came back down to the breakout point again. But now it's stopped, so market is done. There's 7 more minutes left for maintenance hour. So, but that's it. So anyway, we had a really nice end of day reversal. I'm sorry, we really nice midday reversal with 3 legs up, leg 1, leg 2, leg 3, with a really nice stop order market there. Let me switch back to, okay, we have a really nice stop order market there, but you're selling into major gap bars, so probably there are buyers waiting. Once you start to see strong bull bodies, time to exit out of the market. But if you're stuck, sell somewhere. Okay, maybe okay, so if you measure this leg, it will be the 50%. Or we measured it from the high of yesterday, okay, and the low of today, which was bar 36. I expected market to actually get to the 50% pullback, which we did. It retraced back to the 50% of this range. But to me, this was overshoot of the 33%. This right here is 33%. Here we go. That right there is the 33%. It's just overshot it, but notice how it didn't close above. So if you're stuck here and you're very upset with this gap bar, don't let it scare you. Everybody else is probably, institutions are stuck. They need to bring it back down to 34 low where they sold a decent bar to sell. So is, or to these lows at least, they're going to try to come down to the bar 36 bad buy signal bar. So what happens there? Well, they let it go to the 33% and immediately put a sell order, and then it comes down, right? So you can also measure like this. If you're stuck below the 34 and you sold again at the 33% pullback instead of 50, uh, look, market actually did come down to the 34 low. You got a break even there, and the bar 44 did close a body below, okay, look, below the average break even. That is signaling you bears are not done. This isn't just the average break even to sell and exit. This is like, nope, stay in the trade. You're going to get a lot more break even. In fact, you got a full break even, and it made a little bit more before it reversed back up. So is you can also utilize those levels. Then deep pullback and it goes up. This is a bull flag, so expect another bull flag. I generally look for 3 bull flags. That kind of yields to a 3 push wedge top. Then I look for a sideways and down price action, and that's what we got there. So if I have 3 legs up, wedge top, right? The third leg starting point should be my target. Doesn't matter how much it goes sideways. So there you go. That was the target. It just came down a little bit more. Who cares? You can also measure this entire leg is like this. From there to there. This 3 legs, this move up. And then target the 50% pullback and be done with it. And if it moves from there on, sure, you can buy the bounce as well, but that's the end of day trading. Who cares? All right, that's it. Tomorrow, we close today as a doji. Market needed to come down, but we couldn't come down and test this bear day's low. But this bull day, a decent bull close. It's got an upper wick, yes, but this is Thursday, Wednesday, Tuesday, and Monday. Market did go above Monday, but then it started to sell. So we have a trading range here, but it's kind of like an island bottom too. So we expected price to come down and test the Tuesday's low. It didn't happen. It did start to come down and then immediately started to buy that morning. So we had a very bullish day, right? So we went above. But it's a trading range, okay? In fact, this was a trading range. This is the first breakout. What is this? What is this? What was this? It's a balance zone, 50%. So isn't this the same? 1, 2, 3, even the 4th day? Yeah. So if you measure the entire day's range, I would exclude the wicks and only use the bodies, right? In this case, this. Look, it actually ended up coming down pretty close, but it didn't really test it, but it just came down. Now here's the problem. This did not really close is inside. So this is still, it's an inside there, but it didn't close inside the balance zone. So what does this mean? It means tomorrow we're probably going to test its high. So we could actually start maybe around here. Even if it comes down, it might actually go back up. So bulls probably want another leg up, maybe 2 here. I'm going to leave it there for tomorrow. So we might actually get there tomorrow. Okay, so tomorrow is we're probably going to try to test the open of the day. If we do start somehow, if this is a bear flag, if that's what they see, 1, 2, 3, but the bulls also see a bull flag, okay? But if we do start somewhere here, then we would make a double bottom and still go back up. That's what I would like to see. Or if we start to gap up from the moving average, get to the open of today and get above it, bulls will try to close this gap probably. They will try to close and get to these highs. Maybe we can trap them right there, maybe make a double top and then come back down. We'll see. So it's going to be opening somewhere around here tomorrow. All right, I'll see you guys tomorrow. Tomorrow is Friday. Um, oh, I'm not working tomorrow, looks like. Okay. Uh, Hold on. Yeah, I am not working tomorrow. It's Tim Stout, so don't miss it. It'll be another great day. But I'm back on Monday. Al Brooks is on Monday morning, opening up 9:30, and I'll take over 11:30. Um, yeah, and then actually the schedule changed a little bit, and BPA Ken just posted the new schedule. So this is the new schedule. So I'm off tomorrow, but you're in good hands of Tim Stout. He is fantastic with his measuring techniques. And I come in and then, yeah, yeah, but I'll see you guys on Discord. Okay? All right. Bye, everybody. Be safe.